What's up, everyone? Today we're going to be doing just a short trade recap, just as we did a couple of days ago, on this trade that we ended up getting stopped out on NQ or Nasdaq Futures today. As you can see, just by taking this chart at face value, price was all over the place today. No clear direction during New York, more or less just stop hunting. So let's get into why we actually ended up losing this 1 to 2.37 risk to reward trade, even though it was more or less an A plus setup in terms of ticking the boxes of what we normally look for. So going into the 4 hour, which is where we normally start to determine our bias, the 4 hour was bullish due to the recent trade up that we've recently seen in price. And during Asia, obviously we knew that this buy move wasn't going to be sustained without seeing some sort of pullback or higher low. The 4 hour left behind this fair value gap that price ended up trading into during Asia and in London. However, the same gap could be said for the hourly, which is what we then scaled down to afterwards to then see if our biases align between the 4 hour and the 1 hour. Right, so scaling down onto the 15-minute here, we can see that through Asia and leading into London, price was respecting the hourly and 4 hour buy side gap perfectly. However, within that gap, we also had a 15-minute buy side gap that price also respected perfectly and filled perfectly in London as we took out Asia's low, turning low resistance liquidity into high resistance liquidity before reverting to the upside. Also, after we filled the 15-minute perfectly, we also managed to see that 15-minute market structure shift that we needed to see after seeing a failed continuation in structure through Asia after making the high. As we can see, higher high and a lower high, which also then toward creating all this low resistance liquidity down through Asia. After seeing the 15-minute market structure play out, it was obvious that then now we could scale down onto the 5-minute and 1 minute, knowing that we would kind of be looking for a lower time frame change in state of delivery. Scaling down onto the 5-minute, we could see that market structure had indeed been shifted. As we could see, there was lower lows. Then we made a higher high, taking out this high here and this high here on the 15-minute. And now then we could see that the higher low was in play. Great. So now what we really wanted to see was a 5-minute inversion and then 1-minute inversions just as added confluence. So as we can see here, the main inversion we were kind of looking out for was this one, as it was the 5-minute gap that ended up making the higher low, which price ended up inverting perfectly and retesting before breaking out. Now, if we scale down onto the 1 minute, which is typically where we execute, there were two inversions that we saw play out that really gave us that added confluence into the trade. First of all, we had the inversion of the gap at the top of the 4 hour and the 1 hour, which caused this whole low time frame displacement move to the downside. And then we also had the inversion of this 1 minute gap here that actually caused the inversion of this gap. So more or less, as soon as it happened, we were like, well, we've now traded back above the 4 hour and the 1 hour, seen the low time frame inversions that we want, 15-minute market structure shift. Market clearly wants to change the state of delivery that we're in, and we thought that really and truly for our take profits, there were clear draws above. If we scale back onto the 15-minute here, just to show you those. Right, so obviously we had TP1, which would have been taking out all of this low resistance liquidity here. Then TP2 would have been Asia's high, which actually should be low resistance liquidity, but we wanted to turn that into high resistance liquidity. Then we had the high, which was just before all-time high, and then we had all-time high itself. Overall, this trade would have played out as a 1 to 2.37 risk to reward ratio. Our stop was 42.7 points, with take profit being 101.5 points. More or less, we didn't really get to hold that trade for long. We were more just holding it during pre-market. There was a bunch of chop, New York opened, and we got slammed straight through our stop loss. Right, so as we can see here, just by looking at futures markets, we're taking a look at ES here or S&P futures. Since Monday, there's been no real sense of clear direction to the market. We've kind of just been chopping under the highs. If we take a look at NQ as well, NQ. Yep, NQ is kind of following the same pattern. There's no real sense of direction here. Again, we would kind of wait for some prominent high time frame liquidity to be swept, or some kind of news to be released or macro data point that kind of allows us to see a shift in direction, or to kind of provide some momentum in either direction that we can then catch trade off. Right, so just doing some live charting here. If you're kind of confused as to what this is, well, this is basically order flow. This allows us to see kind of, or zooming into a move and seeing what moved price, how price moved, and to kind of allow us to assess the health of a move by understanding who moved price. This is Bitcoin more or less in the last 24 hours or so, and we can see that this is just pure manipulation, right? As we can see here by looking at AgaTrade, which allows us to look at perp and spot CVDs to see who's really bidding. Well, this doesn't draw on hyperliquid, but as we can see here, this is kind of yesterday's spot bid price action. We can see that on Coinbase spot, ETFs were bidding. We had a running TWAP on was it KuCoin, sorry, and Bitfinex, which was great. But halfway through New York, just as we rolled into the PM session, this doesn't even seem like Binance spot was selling. This more seems like Wintermute, who execute on Binance, as we explained in our last video, just completely turned off their algo. And as you can see here, it was literally what caused the local high of the day. Although Coinbase and other books were bidding, it did not match the sell side pressure from Binance's spot books. As we can see here by looking at open interest, just a bunch of majority longs, were carried out. So let's do some live charting here. As we can see, New York session opens at 2:30 GMT. If we just dot that in here, just so everyone can see. Horizontal, right, NYO, New York open. Right, as we zoom into the chart here, what did we see? So we had price running up, which was great. If we just get an arrow and draw that in, price up, great. But what caused price to run up? This is where these metrics come in, right? So if I just grab my pen. Right, so as we can see, both spot and futures CVDs ended up ramping up into what was the daily high for BTC yesterday. Spot books, as we can see here by looking at AgaTrade, Coinbase was bidding like crazy, which as we can see by looking at ETF data, we had a net flow of 477 million. 210 of it was from IBIT or BlackRock spot product, and as we take a look here, we can see the rest came from Fidelity, ARK being the second biggest inflow, and just smaller ones from other products. Great, so let's do some charting here. We can see yesterday that well, really as soon as New York session opened, price really began to leg up. We know that it was because of a running spot bid, as we can see here on spot CVD, which is the green line. Spot volume was really leading the way. However, if we take a look at open interest, we can see that open interest rallied alongside price. Open interest up, futures CVD up, and price up means that majority of this open interest that added was longs chasing into price. As we can see, over 9,500 notional BTC in majority longs chased in just leverage positions alone. That was worth well over $1 billion in leverage positions. If we take a look back to Friday the 10th, this is the reason that, well, one of the reasons that market makers really turned off their algos and wanted to wipe out retail, because just in this move yesterday, in a matter of under 4 hours, we can see that 4% of all open interest on Bitcoin was added in this time period. This is retail traders aping in and of course allowing price to leg higher. But again, it's not healthy for price, because the second that these running spot bids or their TWAP slow down, it really opened the door for things like this to happen. Binance Spot or Wintermute, who execute via Binance books, at the daily high more or less, either, well, this looks like they just turned off their algorithm, but really and truly they just began nuking their spot books. And as we can see here, that the sell pressure on just Binance Spot alone outweighed any sort of running spot TWAP from any other spot books. This then led to obviously this happening. New York session closes at 9 PM GMT, but price just kept bleeding because Binance Spot didn't stop selling, and it outweighed more or less any other running spot TWAP. We can see that from the daily high yesterday to now, over 12,900 notional Bitcoin in majority longs has been wiped out, worth well over $1.2 billion, and more or less this is just a zoomed out look at price. So just some key terms, or going over some key terms that we just used, so just so nobody's confused. Spot CVD means spot cumulative volume delta, or the aggregated spot volume across top exchanges. These are the exchanges that our spot CVD aggregates on. And futures CVD, obviously the same concept here, is futures cumulative volume delta, or the aggregated perps or futures volume across top exchanges. However, one thing that we didn't mention, or that we mentioned in our last video as well, is that future CVD spiking, that when price goes up, can also mean shorts are covering. Covering means buying out or getting liquidated. There was probably more longs that chased, but it didn't total into the net cumulative figure, as shorts were covering out or buying out, contributing to the buy side metrics, but also conflicting the total net OI change. And but shorts covering allows price to leg higher alongside running spot bid, as shorts are essentially market buying out of their positions when they are seeing forced liquidations or their stop loss hitting. Overview of the Bitcoin daily before we kind of wrap up here. Price is all over the place, right? And as we've mentioned before, 112k remains our kind of line in the sand, that being the lower level of our kind of high time frame range here. As we can see also that our daily breaker is also that kind of level that we really love to see reclaim before we kind of assume that price wants to break out of the discount level of the range and move into the premium towards the range high. Well, why is it the daily breaker? Well, we can see that the daily breaker was the last kind of area for fills, or the last downside move, before we created all-time high. Price yesterday wicked back into the range and into the daily breaker, but failed to close below it. Above it. Now we're trading back into this weekly order block that price just kind of keeps reacting in and out of, with no clear sense of direction. We're in a weird place with the macro as well, considering that the US government is in shutdown, and also for perps traders as well. We're having we're in kind of some time period where like any clear kind of setup with all your confluences lining up and kind of just really seeing that A+ setup just gets invalidated by one kind of Trump tweet or kind of manipulation from spot books or market makers as well, taking this as a prime example here, just to kind of take out long positions, just as we saw yesterday. So really and truly, until we get some kind of clear direction, we'd kind of suggest kind of toning down the leverage, or not really using leverage at all, until we kind of see high time frame momentum switch, we kind of see the macro kind of clear up, because this really isn't the environment to be trading in, especially as we saw on Friday the 10th with well over 19 billion in positioning carried out. So really and truly for us, again, the line in the sand, 112k, and we'd love to see daily closures above the breaker to assume that, well, this move kind of could be sustained, and that if we did see kind of the Wintermute repeat of this, that 112k did hold, and again, then we would start to kind of look for low leverage positions. So that was the end of the video. Really hope you enjoyed it, and just hope you like, share and subscribe the video. It was just a quick wrap up and some of our thoughts on NQ, TradFi and Bitcoin in the short term. Until we get some more macro certainty and clarity, we'd really suggest you be careful with the leverage, and really try and narrow down the setups you take, really making sure they are A+ setups, making sure your confluences align, and just just being careful in the market until we do kind of get some more clarity. Yep, take care, and hope to see you in the next video.
See you in the next episode. Magnus, out.